Hey guys, so in today's video, I'm going to be teaching you a super simple trading strategy that plays out near enough every single day, has a 70 to 75% win rate, and it can help you pass your funded account challenges, and it works well with futures and Forex. In this video, I'm going to give you a breakdown of the full trading plan, and I'm going to give you 3 examples so that you know exactly what you need to look for so that you can chart up the perfect A+ setups. I need you to watch this video all the way to the end because I'm going to show you exactly what you need to look for and also what you need to avoid to make sure you don't get stopped out. Now, if you enjoyed this video, then leave a like, comment, and subscribe. But without further ado, let's jump straight into this trading strategy. So we're going to trade this strategy during the New York session, and it works really well on SPY, which is the S&P 500. Now, I would highly recommend that you do your own back testing to figure out which pair works for you best. Now, I also found that this strategy does also work on NQ, but again, I would highly recommend that you back test. So first and foremost, we're going to come onto our charts at exactly 2:30 UK time, which is the New York Stock Exchange Open. Now, wherever you are in the world, adjust this time to your own time zone, but we're going to be trading this during the open of the stock market. So what we're essentially going to do is mark out the high and then the low of the opening 5-minute candle. So as we can see down here, 2:30 5-minute candle. We've marked out the high and then we've marked out the low. Now we're going to drop down to the lower time frame, which is the 1 minute. And now we're going to wait for price to break either side of this 5-minute candle with volume. Now, what we don't want is for price to give us a rejection and then just start consolidating in this area. No, what we do want is we want price to break out of this area like this with volume. If we get volume, we know that price is intending to go in this direction. If we get consolidation, we know that price is simply just looking to play around. So we don't want to see something like this. We don't want to see price wick above because that doesn't count. We need a body close above or below the high or the low of this 5-minute candle. So once we've marked out the high and the low, we play price on, and as we can see right there, we get a break and close above the 5-minute high. What this means is now we're going to wait for price to retrace back to the top of that 5-minute candle, wait for a rejection, and then we're going to take a long position. So as we can see, here's our volume, and we get all of this bullish momentum out from this break. So now we're going to wait for price to come back and retest the high of that 5-minute candle. And price does come back. Guys, I'm running a huge Black Friday sale where I've got 50% off of my lifetime membership. Now, inside of the lifetime membership, you get access to my full A to Z trading course, my daily trades, my full profitable trading strategy, daily futures live streams, access to my community, end of week market outlooks, full support system, and everything that you need in order to become a consistently profitable trader. And you get all of this for lifetime. It is a one-off payment. And again, I'm running a huge 50% off sale, and this has never been done before, and it probably won't be ever be done again. So if you want access for lifetime to my VIP Discord, then hit that link down in the description, put in the promo code Friday to get 50% off at checkout. Now, this does end midnight tonight. So if you guys are lucky to be able to get in, then best of luck, and I'll see you inside of the community. And look at that beautiful rejection. As you can see, price rejected, did not close inside, and it didn't close with a body. It rejected. So now that it's rejected, we can now wait for that candle to close, take our entry at the open, stops go just below the low, and we're simply going to target a 1 to 2. Now again, I found 1 to 2 to be the sweet spot, but if you backtest and you find that you can take the trade for a 1 to 3 or 1 to 4, by all means do that. If you've got the trend correct previous to this trade, you're going to see that you'll be able to hold this trade for the duration of the New York session. So now that we've done all of that, we can see that price then runs straight to take profit. So that's a nice 1 to 2. So there's only a few components to this trading strategy. First of all, we're going to wait for the 5-minute candle to form at 2:30. So that's from 2:30 to 2:35. Once we've got the 5-minute candle, we're going to identify the high and the low of that candle. We're then going to wait for price to give us a momentum break either to the upside or to the downside. No wicks, no consolidation. We want to see a full body closure with volume above or below. Then we're going to wait for price to retrace back into the high or the low of that candle. And once we come back, we want to see price reject. We don't just want to immediately execute. We want price to let us know that it is looking to reject away from this zone. And then from there, we execute at the close of that candle. Stops go below the low. And then we're simply targeting a 1 to 2. That is all. That is our components for this trading strategy. Now, this example isn't cherry picked. This is the most closest example that I had, which was Friday, 29th of November, which was literally yesterday. So now what we're going to do is go back a day before. We're not going to go on Thursday because the stocks markets were closed. And that was because there was a US bank holiday. We're going to go back to Wednesday. We're going to wait for the 230 candle to be formed. And this is our 5-minute 230 candle. As we can see right there, stock markets opened, pushed up here, pushed down here, but then it closed right here. So once we've got this candle, we're then going to mark out the high and the low. So if I put this right here at the high, then I put this at the low. Once we've got the high and the low, we're then simply going to go down to the 1 minute time frame. And on the 1 minute, we're now going to wait for price to give us a break with momentum either to the upside or to the downside. So let's play price on. And as we can see, price starts to consolidate. So if we take a look at this example right here, this does not mean that price has given us a break above. It is just a wick, and when there's a wick, we do not count it because it's not closed. We need a body closure. So right here, we're not looking to take any trades. We then continue to let play price on, and again, price didn't close below, it just wicked. Again, just consolidation. We're not looking to take a trade. We're still waiting, and then finally we get this momentum close below, and then price continues going down. This is what we want to see. Momentum coming out of the zone and a body closure. Once we get all of this, now we can start to anticipate a setup. But now we need to wait for price to come back to our zone. And as we can see, price does. And what does it do? Immediately rejects away from this zone. So once it's rejected, this now shows us that price is no longer looking to go up. It tried, the bulls pushed, but the bears took control and pushed it back down. The candle opened, pushed all the way up there, price came back down and closed down here, right? So that means we can now look for a trade. We enter at the close of that candle with our stops just above the high, and we target a 1 to 2. So now that is our trade setup. And if I play price on, we can see that price then dumps straight to our take profit. And this is what I mean by understanding your overall bias. If you can understand that we are in a downtrend, you can then hold this trade for pretty much the entire duration of the New York session. That's why we have to understand our overall bias, because it will not only help our win rate, but it will also help us extract more profits from the market. Because as we can see, price has continued to dump from this trade, and we literally got the perfect entry up here. And if you were able to hold this entire trade, that is currently sitting at an 8.79% gain on the account. So that is the power of understanding your overall bias. Now, you don't necessarily have to. You can trade this strategy without a higher time frame bias, but I would highly recommend that you do understand your overall bias, because like I said, it will help you extract more profits from the market. So now that's two examples, one with a super clean break, retest and continuation. This one was a little bit more convoluted. We had, a lot more things happening. Price didn't break either side for a few minutes. It played around, gave us a wick up here, gave us a wick down here, and then eventually it broke. So in this one, we had to do a little bit of waiting. So let's look at our last and final example. And again, we're not cherry picking. We're simply just going back a few days. Now we're on Tuesday, the 26th of November. So literally just a few days ago. Now, again, we're waiting for the 230 candle, the New York Stock Exchange open. And there it is. Once we've got that candle, the 5-minute candle, we're then going to mark the high and then the low. Once we've marked out the high and the low, we're then just simply going to drop down to the 1 minute, and we're going to wait for price to give us a break and close above or a break and close below the high or the low of this candle. So now in this instance, again, it was just a wick and it was not a body closure. This means we do not take this trade. So again, if I continue to play price on, we can see that we get a break and close below the low right here, and we get a body closure. Now this is where I need you to pay attention. As we can see, price then immediately retraces back inside of that 5-minute candle. No rejection, it just retraced straight back in with a full body closure and all of this momentum. That doesn't tell us that price is looking to reject away. This just tells us that the momentum is coming back up, right? So in this instance, we don't take a trade, and we're glad that we do, because as we can see, price then goes and breaks the high. And again, if we take a look at what price is doing, it breaks the high, it gives us a little bit of momentum. However, it gives us this straight momentum back into the zone. No rejection, but it's just giving that momentum back. And again, we don't take the trade. And again, we're glad that we do, because price then retraces. So we again just continue to watch what price does. And as we can see, we get all of this momentum to the downside. But again, we don't close outside. So we're just sat on our hands. Now, this is where, as a trader, you need to exercise patience, because none of these trades are going to be picture perfect, and they're not going to be like what they show you in the textbooks. It's not going to be simple. You're going to have to understand what market structure is telling you, and you're simply going to react to only A+ setups. So again, if I continue to play price on, we can see that after a while, price then does eventually give us a break and close below, but the momentum isn't there. As we can see, we get all of this slow volume. No momentum candles to the downside, no break and close outside with volume. We're getting a lot of wick rejections. So in this instance, again, we just continue to sit on our hands. And again, multiple times we get wick rejections. So in this instance, we're just not going to enter a trade. See, price then pushes to the downside, but it again rejects away. Price then again pushes to the downside, but then rejects away. So because of this, we're simply just sitting on our hands, and we're again glad that we do, because price retraces back into the zone. We then get this momentum push to the downside, but by now I've walked away from my computer. I'm no longer interested in taking a trade. And again, I'm glad that I do, because price then retraces back into the zone. So we understood that there was a lot of consolidation happening. Price has given us false breakouts. It's given us a lot of wick rejections. The volume is slowing down. So what do? We walk away. We don't take a trade. We preserve our capital for another day. You've saved yourself from an unnecessary loss potentially, and you come back to trade another day. So that pretty much wraps up this video. So I hope you understood exactly how to trade this strategy, what components you need to look for, how to place your stop losses to take profits, and everything that you need in order to be able to take all of this data, backtest it, and refine it so that you can build an edge that is perfectly fitting for you. If you guys want me to do a full backtest where I go through a larger data set so that we can understand exactly what the win rate of this strategy is over a long-term horizon, then let me know by liking this video. And if we get to 200 likes, then I'll do a full backtest so that you guys can understand the win rate. But on that note, I hope you guys enjoyed this video. And if you did, again, please don't forget to leave a like, comment, and subscribe. But I'll catch you guys in the next video.